The individual investor should act consistently as an investor and not as a speculator. Quite a powerful statement, isn't it? But what does it really mean? Well, let's dissect it together. The heart of this quote lies in the distinction between an investor and a speculator. An investor, you see, is like a marathon runner, focused, disciplined, and playing the long game. They put their money in diverse, well-thought-out ventures, hoping for a gradual but steady growth over time. On the other hand, a speculator is more akin to a sprinter. Swift, risk-taking, and always on the hunt for the next big thing. They chase high returns from short-term market fluctuations, often risking more than they can afford to lose in the process. Both approaches have their merits and demerits, but the beauty of being an individual investor is that you have the power to choose your path. So what does this mean for you, the individual investor? Now let's dive deeper into the investor's mindset. Investing is a marathon, not a sprint. It's a game of patience and consistency. It's about making deliberate, well-researched decisions and sticking to them even when the market wavers. That's the essence of being an investor. In contrast, speculators tend to jump from one hot stock to another, guided by rumors and hype rather than solid research. They're in it for the quick wins, the adrenaline rush. But remember, in the world of finance, speed often equates to risk. Let's think about it for a moment. Imagine you're nurturing a tree. As an investor, you'd water it regularly, protect it from harsh weather, and patiently wait for it to grow. On the other hand, a speculator might be tempted to pull on the branches, hoping to speed up the growth. But we all know that's not how it works. This is where the importance of a long-term perspective comes into play. Investing is about understanding the cycles of the market, knowing that there will be ups and downs, but in the long run, your patience and consistency will pay off. So it's not just about making money, it's about fostering an attitude of patience, research, and long-term thinking. It's about being an investor, not a speculator. So, are you an investor or a speculator? Think about it. In contrast, let's explore the speculator's world. Speculation is a game of high stakes, a thrilling roller coaster ride of potential prosperity or possible ruin. It's a world where quick profits are the name of the game, and the thrill of the gamble can be intoxicating. Speculators are the risk-takers of the financial world. They dive headfirst into volatile markets, seeking to capitalize on short-term price fluctuations. One day, they might be betting on the rise of a new tech startup. The next, they might be wagering on the decline of a once mighty industry. Unlike the consistent and calculated approach of investors, speculators are often swayed by market trends and current events. They make their moves based on anticipation and often speculation. It's a game of educated guesses, of hoping to strike it rich with the right bet at the right time. But this approach can lead to inconsistent results. When the stakes are high, the losses can be devastating. And while a lucky break can result in impressive gains, the lack of a long-term strategy can leave speculators vulnerable to the whims of the market. The speculator's world is one of uncertainty and unpredictability. It's a world where fortunes can be made and lost in the blink of an eye, where the line between success and failure is razor-thin. Now, do you see the difference between investing and speculating? So, what's the takeaway from this? Let's distill what we've learned today. The power of the individual investor lies in the ability to act with consistency and conviction. This is not a game of chance, but a game of strategy. It's about making informed decisions based on analysis and understanding, rather than betting on uncertainties. Adopting the investor's mindset means committing to a long-term vision, being patient, and resisting the urge to react impulsively to market fluctuations. It's about understanding that investing is a marathon, not a sprint. When we choose to act as investors, we set ourselves up for more consistent results. We're not just chasing quick wins, but building a solid, sustainable financial future. We're not just speculating, but investing with purpose and direction. And that, dear friends, is the key to unlocking the true potential of individual investing. Remember, the individual investor should act consistently as an investor and not as a speculator. Now, we'd love to hear from you. What struck you most about today's exploration? Do you see yourself as an investor or a speculator? Hit the like button if you found this insight valuable, and remember to share it with others who might benefit. And if you haven't done so already, please subscribe to our channel for more thought-provoking content. Drop your answers in the comments below and don't forget to hit that subscribe button. Thanks for watching.